So we saw some very unusual Nvda call prints that came in on Friday. You could see here a $1.5 million print, 1.4 million, 1.2 million, and another 1.2 million over here. All out the money strikes, because you can see here all these around 110, 113, 117, etc. And the spot price at the time was 105. So these are out the money, and these are for the 117.25 expiration. You might think, well, that's kind of far away from right now. Today's August 11th when I'm recording this, so we still have a lot of time until these expire. However, it is unusual that we saw this here on Friday because there were a lot of other tech leaps that we saw as well. And what do I mean by other tech leaps? Well, for example, here we have PayPal. PayPal saw a $5.3 million 65 at the money strike for the 12/18 expiration of 2026. So this was a very far out expiration. They chose a true leap. In this case here, a call leap, where they're looking 1+ year in terms of the expiration, not like Nvda where they were looking at a January expiration. But we saw a lot of this across the board on Friday, and it made me think, why are these institutions so interested in adding these further dated calls? And I looked over at the first chart here, which it would be Nvda because of those calls that we just saw for the January expiration. And the first thing that interested me, just based on the 1 hour, pretty short-term time frame, but this was the falling wedge that I noticed immediately. You could see here we have the downtrend that it's been contained within, and then we also have over here another trend line that's acted as a support. And what happened on Thursday, between Thursday and Friday really, is we had a breakout of what is basically a downtrend, and so far it's been able to maintain above. What's even more interesting is if you go over to here to the daily chart, you can see that there was a very nice pickup candle on Monday of last week after a decent sized gap down. So you can see here we gapped all the way down to around 91 and it got picked up very nicely. Typically these types of candles are major bottoms. Of course, it doesn't always have to be the case, but that tends to be the case, especially for something that's in a macro uptrend like Nvda is. Now, the other thing that I want to mention, if you've been watching these videos, let's go over to Nvida's chart on this specific chart that I have here, because I want to show you just with a clean slate basically what I've been looking at. And if you remember, I had a blue box, and I'll show you that visually right here. I had a blue box where this previous high was, because this was a previous supply zone. So if I go down to here, I had a blue box in this range. What's even more interesting is that this is the first retest of a previous very hard supply zone from over here that we finally were able to get above. So this is the first time it's been retested as a demand zone, and it acted as a very thick demand zone. You can see just based on this candle, this nice pickup, and then it retested it afterwards with this daily candle on Thursday. Both of those were successful retests. Personally, this makes me believe that there will be some upside here. Now, based on the flow that we saw for those January expirations, I don't know, just based on this, if it's going to go up into January. However, the strikes that they chose in this case could be a very good possibility here for Nvda, just based on what we've seen before, as well as the fact that it's found very nice support around here on the daily chart, plus what I just showed you on the hourly chart, like as both short-term and a little bit more of a multi-week setup would work here, because again, short-term here would be the 1 hour, and then the multi-week would be the daily. Both of those are converging with a bullish setup. And I'd say, because again, we always need to look at risk as traders, I'd say as long as this stays above 98, it should be a relatively good. So you're looking at about 5 or 6, maybe a little bit more if you want to use an hourly close of risk for a lot more potential reward. I could see this going up to 115, 120 potential just in the short term. Could go a lot more if you were to get further dated contracts. Personally, I'm only interested in a short-term move here on Nvda. I think semiconductors are very oversold at the moment. Typically, whenever you see a large-scale correction in a sector like semiconductors have had, because Nvda, just to show you here visually, is down about, well, when I went to the low, was down about 35%, but right now it's still down 25% from its current high. And typically when you see these types of corrections in a sector that was previously the most bullish in the overall market, you're going to see pretty aggressive short squeeze rallies once they do find support. That's kind of what we're starting to see right here. Would not be surprised to see continuation from here. But like I said, always good to have some type of risk in place. I say as long as it remains above 98. Could even say 99. This looks good to go for some type of a short squeeze to around 120. So that's what I first wanted to share in today's video. Found this very interesting. And speaking of a retest of a demand zone that used to be a previous supply zone, we can see here on Apple, because this just happened last week, and this is a chart that I've shared numerous times on this channel. You can see here we were within a range before for a very long amount of time on Apple. It finally broke above the range over here Thursday, June 11th, and this is the first time we retested the previous supply zone. As you can see here, this blue box, because remember from back here, it acted as a supply zone, so numerous rejections up here, over here, etc. And then this is the first time we retested it as a demand zone. Very strong response. So just based on what I see here from Apple and then what I showed you on Nvda, this looks pretty bullish, not only for individual names, but just the overall market so far, because these Mag 7 tickers are responding favorably to key demand zone levels, which these have been the main culprit for this sell-off that we've had. Of course, you can factor in a variety of other things since it's not just one variable here, but the Mag 7 have been selling off now for the past 2 or so weeks. So the fact that Apple found a support here, Nvda found a support around there, that is interesting to me. That's something that could mean that the overall market could have some type of a squeeze in the short term. So that's what I'm watching for as of this week. And then the last thing that I did want to mention here to you guys is if you go over here to the dark pool levels feature, you could see that we had a very light amount of dark pool prints across the board. Signature dark pool prints 740 million and 386 million between 532.95 299, and then down here only about 469 million at the 530 level. So recently, especially in the summer, we've seen noticeable difference in overall dark pool volume. And the main reason I personally believe for that to be the case is because it is this summer months, characteristically just based on what we've seen with the dark pools. And by the way, you can filter for previous months, so you could look back in a previous time period. But what we've seen is during the summer months, volume across the board in the market goes down, and that's the same with the dark pools. So dark pools account for about 14% of overall volume. So of course, if market volume is down because of the summer months, people on vacation, Wall Street not necessarily the most active during this time, you typically will see something similar in the dark pools, and that's what we've seen so far in terms of signature dark pool prints. So if you do see some type of a large print during the summer months, then that is even more eye-catching because that's not really that normal. And that's kind of what we saw here with last week, just after hours. We saw 500 million here at the 406.02 level, and then another 300 million the 406.02 level. So total of 800 million in the dark pools after hours. And that's very unusual for Microsoft. So that's something that piqued my interest, and I looked at it this weekend. So I'll show you right here. You can see it too has found demand at a previous demand zone. So from back here, this is where it found support before a large rally. Afterwards, finally retested it. Personally, based on this chart, this does not look like it's ready to go back to highs, unlike a chart like Apple, for example. This is actually pretty weak that it was unable to hold the previous supply zone from over here. Very similar, and I'll just show you very quickly, very similar to what Apple had. This was the top of a range, so it was unable to hold. We saw a very brief bounce, but then it broke below, found a resistance, and then continued down. Because it didn't hold this, macro-wise, I'm actually not bullish on this compared to other Mag 7 tickers, but for some type of a short squeeze in a short period of time as well, I could see that happening here. It could go back up to around 420-ish. I'm around that level. So not the best of setups compared to something like Nvda that I showed you, but this is a bit interesting, and I wouldn't be surprised if these dark pool prints that we saw here are some type of institutional interest down around this range, because it is technically a demand zone. You can see from down here, numerous touches over here for supportive bounces. And then as I go across, you could also see this has been respected very nicely even during this time period over here. So it's no different since we retested it there. Don't believe it's going to be something that's macro bullish and go straight back to like 460, 470, but this is something that can squeeze in the short term, assuming the rest of the market continues with that theme that I'm expecting here shortly, and no pun intended to that. So this is my plan for this week. And then one final thing I wanted to share is IWM. This one is very interesting to me because it had a breakout of, yet again, a supply zone, very key supply zone that found a resistance numerous times on the Russell, finally broke out, was unable to hold the breakout because you could see here we gapped down again, and it's been under this blue box ever since. I actually see this as being very bearish. So there's a theme so far, if you look at last week's flow, which is a nice complement to that technical aspect that I just shared with you. But we had the $1.7 million put print over here, and there were a couple other puts as well throughout that week. $1.1 million at the money over here, $1.3 million, $1.1 million. It seems like even though rate cuts might be on the horizon, IWM flow as well as the technicals look bearish to me. And we can just see right here, based on its rejection that it had recently over here, and then also just its inability to get back above this candle or this large blue zone for that matter, it just seems bearish. And as long as it remains under this blue zone, I actually see that as a short opportunity. So I'd say bullish QQQ Nasdaq in the short term, and then I'd say bearish IWM in the short term as well. So there's kind of like a divergence going on. So even though, yes, we have seen some type of like a bounce from here, don't think it's going to be to the extent as the rest of the market. And really, it's pretty basic here. As long as it stays under this blue zone, it is going to be in a bearish territory, and I personally will look for some type of short swing setup. So that's my plan for this week and beyond. Again, all of these comments that I made in this video are going to be relatively short term. I'd say about 5, 7, maybe 8 sessions length, and then things can really change up. But as of now, it looks bullish, especially on tickers like Nvda, pending they're able to stay above like 98, 99, that kind of range. So regardless, let you get back to your day. Appreciate you guys watching this video as always. See you next time.